Welcome back to the channel. My name is Brad, and today we're going to cover FEPI, AIPI, EOS calls, Goldman Sachs calls. We're going to talk about the U.S. government being downgraded by Moody and everything else in between that I can think of by the end of the video. We'll just talk about it. So let's go ahead and get to it. So this week, let's jump right into it. NEOS and SPY. You can see where their calls are. They are above the calls. They're above the call spread of GIAX. And we'll just see how this all goes, because the end of the green line is when they will roll those calls. So right now, you should be seeing about half the movement of SPY. Thereabouts. Don't normally cover this one, but SPY H. It is above the strike. You can see how far it's above their strike, and there it is. It's above the strike. And I do believe it's about 75% of the portfolio. Don't quote me on that, but it is a significant percentage. Looking at QQQI and GIAX, hey, it's above the calls. It's above the call spread. There you have it. QQQH, we are above the call. You can see where the protection is. Again, about 75%. If I look at the Russell and IWMI, well, GIAX is not where they want to be right now. You don't want to be in the box. You want to be above the box or below the box. But we'll see how it finishes by the end of the day. IWMI, we're just above their calls. So we see, I don't know, 40% of the movement right now of the Russell. Those were the calls on the S&P 500, the NASDAQ, and the Russell. Now let's talk about GPIX and GPIQ. The percentage of the portfolio being written on is slowly going back up due to volatility, slowly going back down. There you have it. You can see that they added a new strike. The old one finished way in the money, but you can see where those percentages are. And as long as they stay 30% or below, we're just fine. We just don't want them to be up near 50%. That's a personal opinion. So let's talk about my favorite subject, Bitcoin and BTCI, BAGY, and BITY. Right now, we're going back and forth right on the bottom strike of BTCI, and BAGY and BITY rewrote their calls. And actually, there's a slight difference between the two this week, but it's so slight that I didn't even draw the second line. It's just going to stay as it is. You can see how much farther they are out of the money compared to where BTCI is right now. And they re-rate those calls weekly. And the end of the line is when BTCI and NEOS will roll those calls. As everybody probably knows, I still hold IYRI, and that is on REITs. So right now, it is right at the very first strike on the REITs, exactly where we need to be. Let me collect my 11-12%, and I gained all the gains that happened during the month, and I am just happy. All right, let's get into FEPI and AIPI, because they rewrote their calls on Thursday last week, and I was able to grab the sheets right after they rolled their calls the best I could do. It's when they had it published. Thursday last week, they rewrote the calls. On Friday, they had already gone through the Tesla call on FEPI. And I'm like, man, that was like really, really close to the money on that. But the average out of the money was 4.9%. On Friday, we saw 0.61 gain, when all the underlyings gained as an average 0.83. That's basically due to Tesla. And that's not that big of an issue, but just want to make sure that you're aware of they had one call really close to the money, and maybe they're thinking Tesla's going down this month, so they might as well make the maximum premium. I don't know. I don't know what's in their minds. I don't work for them. Today, I went and re-looked at this, and you can see FEPI, since they rewrote these calls, are up 0.32, where the average for this is only up 0.13. Total out of the money is 5.63. Now you can see that Tesla is now out of the money. So there you have it. Just how they're writing the calls and where they're at. Maybe we see a large movement, and all I really want is the underlyings to move 1%, 2% in a month. We capture it. Now somebody will say, well, they pay 2%. Your NAV is going to go down. They're still making the income with the cover calls. And what you're having is what they call theta. And as time decays, those cover calls expire worthless, or they're in the money and they have to settle it. But either way, let's not worry about the mechanics of that portion, because they still are making, and I checked the math this week because I grabbed it at the right time. They're still making that percentage. So let's not worry too much about are they overpaying, because it does not appear that they are. Now, I did go back last month and I captured some of the data. So last month, everything with AIPI went up 27.39 as an average. That's kind of wrong because that's not evenly weighted, but AIPI went up 13.5%. And remember, they also paid you 3%. So there you have it. Just showing you how things have moved through the time last month for AIPI. I was able to do the exact same thing for FEPI. So the average movement of all the underlyings was 28.53. The biggest one, as you can see, was Tesla. Tesla had a huge movement upwards. They were able to capture 14.7% of that and pay you, because this is strictly off of price appreciation, not total returns. So they were able to pay you 2% on top of this, because that's approximately what they pay monthly. Now let's look at AIPI. So on Friday, when I captured the calls Friday morning, when they rewrote them on Thursday night, you can see where everything was at. We already had some in the money, some out of the money. You can see that they captured 0.71 of the upside when the average moved up 0.86. Okay, I get it. Looks okay to me. But when I look at today, I look at where they are in the money, out of the money. And by the way, the purple is actually where the majority of those calls are. Just to make sure that you're aware of that the majority of the calls are in the purple, unless it's a single call. And then I didn't color code it because there's only one call. But looking at this, they are up 0.5, but the average underlying is only up 0.17. That is that covered call effect, them coming in and out of the money, and there you have it. Let's not panic, just average down. They're paying you 3%, and I'm only looking for 0.66% per month. So I get to reinvest over 2% of those 3% distribution back into the fund, just to average down. Let's get into the economic news. And I don't normally cover this, but it was big enough for me to go ahead and bring it to your attention. So Moody downgraded the U.S. government. So they're no longer a AAA on Moody. They were already downgraded by other rating agencies in the past. So this should not have been a surprise to anybody that this was coming up. But one thing that this did do is it really hurt long-term treasury. And the long-term treasury rates surpassed 5%. And when treasury rates go up, the price of treasuries go down. There's also the whole fear of inflation. So let's take a quick look at a couple charts. I looked at SGov. Well, SGov is still going up. No real hit on short-term treasuries. And that's why I'm going to be holding my holdings that I'm waiting for things to drop to reinvest into short-term treasuries and not long-term treasuries. Because if I look at TLTW, that I know some people have been looking at, well, TLTW still has a negative decline and continues to go down because of inflation fears and now the high rate of 5% on treasuries. So hopefully that kind of explains why I got into TLTW way back in August, wrote it up a little bit, then got out. But I am going to tell you, I am staying away from long-term treasuries for the time being. I've looked at some gold funds, and I do believe Neos Gold Fund comes out before the end of the month. Don't quote me on that. I will do a video as soon as it comes out, because if I can capture the sheets the day that it launches, I'll give you an approximate percentage of what it will pay. So until next time, God bless.